All right, let's bring in Mr. Bismarck Rewane. Great to have you, sir. So, definitely investors have been waiting for this moment, and it's finally upon us, the first rate cut by the U.S. Federal Reserve. Talk to me about the significance of this move.
Yes, good morning, Nadia, and thanks for having me. I think this is the major milestone in the global economic space. This is the first time in 4 years in which the Federal Reserve has actually moved rates downwards. It was a jumbo move. Everybody was expecting 0.25%, but they actually did 50 basis points, which is significant. It has its political implications because it says that it's quite comfortable with the level of inflation, and they are keeping their eyes on employment and growth, and the economy is resilient and strong. Coming 6.5 weeks to an election, this is a major endorsement for the incumbent, for the Vice President Kamala Harris. So this is great news. But what are the implications of this as far as we're concerned? One is that because of this, the price of oil has spiked because once the interest rates fall, the dollar gets weaker. And then when the dollar gets weaker, commodity prices increase. So what we've seen the price of oil go from $72 a barrel, 71, 72, now to 74 plus. It also means something else. The stock market at first rallied, and then it gave up most of it because the interest rate cut had been priced into the market sentiment. But the futures today are showing that it's going to open stronger. So what this means is that, one, the dollar gets slightly weaker, interest rates are lower, and that a lot of investors in the advanced markets that are going to be dissatisfied because of lower interest rates are going to be moving their monies and their funds into emerging markets like Nigeria and in sub-Saharan Africa and Egypt and China. Now, so if this reversal of capital flows takes place, it means that, technically speaking, the Naira gets stronger, the balances and investor funds become more available globally. But that's not all. There is a lot of competition for global funds. And therefore, it's not to mean that anybody who is doing the wrong thing is going to attract funds, but you have to do the right thing and continue to sell your story. Thirdly, the probability of a debt rescheduling for countries that are bunched up, that are having high debt service burden, will be higher. And Nigeria falls into that category. We begin to prepare ourselves for debt rescheduling based on bunched up maturities in the year ahead. I think that is more important than anything else. So the effect on this, because the price of oil has gone up to $74 a barrel, it means that the subsidy saga comes back to us. But even then, the average price that was expected for the year was $80 a barrel. At $74, it's still Nigeria, and the Nigerian refiners are still in the money. So, and that helps and goes a long way in terms of preparing people and preparing the domestic inflation profile in Nigeria. Don't forget that Nigeria's inflation actually came down for 2 consecutive months, announced that. But like we said in that discussion on Tuesday, we shouldn't get too excited because we think, and we believe strongly so, that inflation begins to increase again in September after the increase in the price of petrol and things have actually factored in.
Right, and we know, with the previous rate hikes, most investors had to run to safety, away from risk assets. But bringing it down to Nigeria, how do you see this impacting the domestic market? And is it time to just go all in for foreign bonds at this point, U.S.-denominated bonds?
No, firstly, the Nigerian market is getting more internationalized. In other words, people can invest in dollar instruments in Nigeria right now. The Securities and Exchange Commission is making that possible. However, what we need to realize, the U.S. economy is the largest economy in the world. It's about almost 27% of total output. And therefore, whatever happens in the U.S. affects all other markets. What are we saying here? We're saying that certain prices of commodities in these markets are now beginning to show signs of improvement. For example, the price of a basket of tomatoes is now down 63% to 22,000 Naira. Palm oil, as you know, has come down by 12.5% to 7,000. And as of this morning, I understand the price of flour has gone in the markets have gone up to 70,000 because of some things happening. But beans has become quite unaffordable. Beans is at 180,000 naira. It's gone up by almost 20% in the last 2-3 weeks. And of course, rice is now back up, I understand, to 100,000 naira, and that is quite frightening. So we have a mixed bag, and rice is about 8% of the basket, the food basket. So coming back to what I said earlier, that we expect inflation to increase again in September, so we don't get too excited. We expect, because of dollar weakness, some global commodity prices to increase. But we've also seen an increase in the price of gold. And that is always an indication that markets are happy for a stronger U.S. economy, but also believe that the U.S. dollar might be slightly overvalued at this time in relative markets. So what does that mean for us? Said domestic. I said it earlier on that the price of oil increases. That's good for our revenue, but also bad for our domestic car for petrol prices. But also, we're seeing that the Naira has depreciated, which is strange because the US dollar has weakened, and now the Naira has depreciated, not because of anything else, but because we have not come up with an auction. We need to come out and say we are going to have the next auction. Once the central bank announces the date of the next auction, you'll see that the Naira will appreciate quite sharply. That it's up to central bank to do that. On the other side, we've seen LNG. The price of LNG increased by 1.12%, and that's good for Nigeria. 14% of Nigeria's exports comes from LNG, and we're seeing the stock market in Nigeria also begin to rally in line with most global markets.
All right. So now that most central bankers are heading towards the dovish direction, that's the major markets, but we're still seeing some pressure. And in some African countries, what does this signal for 2025?
No, I think one thing that I didn't say was that Jerome Powell said this is 50 basis points, but he believes that there'll be another cut this year. And the question is he going to do 25 or 50? We believe that on the upside, he could do 50. If he does 50 basis points, right, which means that the cost of money, international money, becomes cheaper, activities in the world get more aggressive and begin to get robust, and we begin to see that level of activity, that economic activity that will actually boom, actually buoy the economy, especially in China. China has been suffering. So we think that the Chinese economy begins to recover slightly. We think that barring unforeseen circumstances, that you will have a technical deadlock in the Ukraine area. Therefore, a truce may be possible because we're going to the winter season. But generally speaking, a good economy is always good for markets. And everything, all hands are on deck, and fingers are crossed as to what will happen on November 5th at the US election. But because of this move, this is very, very positive for Vice President Kamala Harris. But you never say never until the last moment, because 24 hours is a long time in politics.
Right. So definitely a lot to unpack there, but we'll see how this impacts most of these markets going forward. Thank you so much, Mr. Bismarck Rewane, MD, Financial Derivatives Company. Thank you.
Thank you for having me.
We'll take a breather now.